Let's just take a look at what's happening on the fixed income market. How have bonds been performing in the last week?
The fixed income market has been faring well since the beginning of this year, and by last week, with the inflation that just increased, what we saw, as we discussed earlier last time, the market has been a bit vibrant because of the shift we had from the equity end of market down to the debt end of the market. It's been okay because people are looking at a situation where their confidence level is being raised in terms of where the central bank is, in terms of implementing policies that could move this country to the next destination.
Looking at those monetary policies and just putting it into the context of where we have the repo rate sitting at this stage, sitting at 8% after a 50 basis point rise at the last meeting. Now, Sanusi recently stating that rising inflationary costs are a key concern for the economy. We had an inflation index ticking up to 12.4% in May from 11.3%. But Sanusi coming out saying that a monetary policy isn't enough to stave off inflation. What is your take on how the central bank has acted in terms of a monetary policy to date?
I will start by saying that since the beginning of this year, the central bank has been practicing what we may call a policy front load. They've been doing a sort of preemptive strikes to be able to handle inflation or manage inflation. But at the same time, with what has just happened, we all know that the economic indicators behave in a way of random walk. But at the same time, you can see that with what happened from inflation moving from 11.3 to 12.4, it means that there are some other factors that are actually influencing the increase in the inflation index. This is because in a developing economy like Nigeria, we need to look at the primary sector of the economy. That growth needs to be entrenched. And if we must do that, while you are trying to put this type of preventive measures, there's need to assess the level of impact in the economy.
Let's just take a look at activity in the economy at this stage and lending to the private sector, which is said to help stimulate growth. We had private sector lending declining by 1.6% to 9.85 trillion naira. That's despite AMCON buying up toxic assets from depository banks. So despite this increased liquidity, banks aren't lending. So is this a case of the private sector is not borrowing, or the banks are holding back on offering out that liquidity at this stage?
You can agree with me that the private sector is the main sector that has the vibrancy and the efficiency they need in any economy. Looking at what CBN is doing, interest rate is one of the strongest tools you can actually use in moderating inflation. But while doing it, as I said earlier, the emerging economy requires us to do this thing. What you should be practiced is what we call flexible inflation targeting, which at the same time, you look at how you can entrench the growth that you need in the economy. Because once you increase the interest rate, what you see is the situation where banks will look at the situation trying to shift to do their trading or doing their investment with other banks or even with the central bank, instead of trying to lend in the risk sector of the economy where the risk is higher.
So you're pushing for inflation targeting, and you think this is a better way to go for the banks to be able to manage inflation and at the same time stimulate growth without cutting off that lending stream to the private sector?
For now, the central bank often are left with two alternatives. They need to determine whether the inflation targeting is a long-term goal or rather a short-term goal. I must tell you that if it's a long-term goal, they actually leading us in the right direction, and we have so much confidence in this particular regime we have in the Apex Bank of this country. But at the same time, if we go the other way of short-term goal, I tell you, we run the risk of sacrificing the real growth we need to entrench in the risk sector of the economy. Though they may have an option of what they are planning for, but we'll get the situation where we may run into what we call time inconsistency problem, moving trade to what we may regard as constrained discretion.
Let's just take the conversation into what's happening in the banking space at this stage. We've had the introduction of Islamic banking into the country. It has been quite controversial. What is your take on the introduction of non-interest-bearing banks into the economy?
The issue is it depends on what the central bank meant in sort of Islamic banking. In the Middle East, the banking in terms of taking into sukuk and other specializing for the Islamic people, we see a situation where it helps to develop the society. But the intention and the national and the character have to be in place in a place like Nigeria, where we have several nations making up one federation.
Is this a time to be introducing Islamic banks when we've had this whole unfolding a banking crisis? We've got the recapitalization deadline for September. Is this the right time to be introducing more banks when we've had so much consolidation already in the sector?
That's a decision the Apex Bank has to take. We are still trying to see how we can run the universal or the commercial banking we're having. Before introducing such Islamic banking, they need to look at the development of the nation, the literacy level in terms of playing this two type of market in the same nation, where we are still looking at how we put the banking or the financial sector in a stable condition. But I still tell you that they're in a better position to decide the way forward. I told you Nigeria is a multinational nation, so we need to put some consideration into place. There are some people who actually need that particular Islamic banking to move forward in their business.